Hello, everyone. At the outset, we hope and wish that all your near and dear ones are safe. As citizens and as market participants, what we are looking at is a deceleration in the new cases. At the same time, we are looking at acceleration in the vaccine supply. The Niti Aayog has given a data which suggests that there could be 200 crore vials available by the end of this year. If that data were to come true, and if vaccination itself were to pick up, that would be a great thing for the country and also as market participants. The difference between the second wave and the first wave has been that the second wave has impacted almost everyone throughout the country, which essentially means that even the rural India has been impacted this time around. However, having learned from the first wave, we are better prepared in terms of manufacturing and we are better prepared in terms of distribution. So we have seen the government infrastructure projects continue even in COVID 2. That's why we believe that the impact on the economy of COVID second phase will not be as harsh as the first phase. If we assume that the economy, which has been locked down practically all over the country, and starts to slowly resume its opening, then we have to assume that one quarter, which is April to June, is where the maximum impact lies. If we start to do some maths, we will come to the conclusion that probably the productivity lost will be equivalent to 1 month out of the 3 months of lockdown. That's because, as I said, some of the infrastructure projects and the manufacturing units continue to operate, and we have seen that the decline month on month from the March month has been more like 20-30%. So it could be a fair estimate that we lose 1 month of productivity. What that means is that the Indian GDP, which is projected to grow anywhere between 10 to 12% for the year FY22, will see a cut of anywhere between 1 to 3%, depending upon how things start to resume and how the recovery happens. What, however, remains a concern is, will there be a third wave? And if yes, what kind of impact that could have? Well, nobody can guess that right now. What we know for sure is countries like the US, the UK, Israel, and some of the other countries which have had a fair percentage of population vaccinated have started to open up. What that means is, as and when we also get vaccinated, the country receives 30, 40, 50% vaccination, we will also start to open up. Coming to the markets. Well, the function of economic and earnings forecasting is to make astrology look respectable. What that essentially means is, in the current scenario, it is very difficult to forecast and predict earnings. For whatever it's worth, currently the street is expecting an earnings growth of 35% for FY22 on a base of around 14 to 16% growth in FY21. Having seen what's happened in the current quarter, we are likely to see earnings decline of 5 to 10% on these estimates. However, all these estimates are subject to change depending upon the pace of recovery and the pace of opening up of the economy. Given the fragile nature of the economies currently world over, it is unlikely that the central bankers will want to take away liquidity which is there in the market. In that backdrop, drawdowns in the Indian market are unlikely to be more than 10% or so unless there is a strong third wave or there is tightening of the economy by other countries across the world. Given the way that some of the Indian corporates have been able to variabilize hitherto the fixed costs that existed in the system, the earnings growth for the next 5 years for corporate India can be an CAGR of double digit or so. It can be mid-teens as well. In that backdrop, some of the sectors that we like are domestic cyclicals, where we believe there's an infra wave coming. We saw that in the budget, and we also saw stocks moving in that direction before COVID phase 2 hit us. Given that some of the advanced economies of the world are ahead in terms of economic resumption, we also like some of the global cyclical plays as of now. However, from a medium term perspective, we believe some of the select mid-caps in our country can do very well, where we have seen the shift from unorganized to organized and where we have seen that the balance sheets have been repaired. We continue to like sectors which are related with the China Plus One strategy, at the same time sectors which are beneficiaries of the PLI scheme as well. One thing that we need to remember in investing is one needs to know what you own and one needs to know why you own it. Thank you.